Feels good, doesn't it? Feels so good to finally be making some money again in crypto. Look at your portfolio going up and up and up every single day. And I think you should pat yourself on the back. I really do. I think if you've weathered the crypto bear market and you've got some really good entry levels, you should most definitely celebrate with a coffee and some relaxation. But here's the concerning part. You see, while people are distracted with how amazing the bull run is, especially if it's your first time around, you are neglecting what is possibly around the corner. Now, I have two of these possibilities to share with you in today's video, and mark my words, this is a video you need to watch. This is literally something that left me speechless when I have done more research into it, and it's going to catch a lot of us off guard if it comes true. Now, if it comes true in the next, let's say, 6 to 12 months, I know I'm going to have a lot of people crying in the comments saying, I can't believe I didn't see this coming. Oh, this is so true. Oh my God, it happens every single time. No one likes to take both sides of the story into consideration and come to a middle ground, because everyone is stuck in their own little confirmation bias. They're stuck in their ways. So today, take the time to learn this yourself. I can guarantee you'll be happy you did. Now look, of course, as you guys know, the purpose of the channel is to teach you something new about crypto. And if you do learn something new and want to support my work, drop a like on the video, but also subscribe so you can achieve your crypto goals. There is two possibilities that I can almost guarantee will play out over the next 6 to 18 months, right? The next half year to 1.5 years. But I believe right now there is one clear course of action that we can easily take to be the most prepared in any case. And trust me, these really two are very separate situations that might play out. Now, the first one here is the most important one I want you to listen to, okay? Because this is the one that will catch the most people off guard. I'm talking well and truly above 90%, maybe even 95% of people off guard. And you'll likely be holding your tokens for, I'm not talking another couple years. If this actually plays out and this is true, you'll be holding your tokens for another 5 or so years, a very long time. And you're thinking, how can you wait 5 years? Crypto cycles only occur in 4-year patterns. Well, this is saying that a different pattern is playing out. You see, what you don't realize likely is that a Bitcoin halving is actually priced into Bitcoin. Hence why we're up so much right now in terms of price well before the halving. Not only the halvings are going to happen and we're going to instantly shoot up over the next few months, 3,000%, right? These things can be priced in because people are expecting that demand. People are expecting the economic shock to the price of Bitcoin. And overall, year on year on year, it causes a mass crypto bull run. So I got this first theory researching a few days ago and came across a gentleman called Credible on Twitter. The guy has 400,000 followers, but I had never heard of him before. And he introduces this very interesting take where you might have heard me speak about this in a recent video 3 days ago, saying how we might have a shorter cycle this time. In reality, it's going to be a shorter cycle, but actually it's part of a much bigger cycle. It's actually the lengthening cycle theory, where every single trough, so the very, very bottom of the market, to the all-time high of that particular cycle, it gets longer and longer and longer, and also the returns diminish. Note this orange color over here for the very first cycle. Notice how fast this actually happened from the launch of Bitcoin. It took only 300 days from the launch to its all-time high to have that at about, what's this, close to 80,000% APY increase. So huge increases in price, or at least percentages, right? And over here, we had the next cycle in red, okay? We had now 746 days from this trough to the very, very top. And then the cycle after that, right? The 2018 one, from the trough to the very, very top, we had 1,050 days, okay? So you can see very clearly that it is depreciating. It's getting longer and it's depreciating, okay? Now, the really kind of curveball here was that the most recent cycle in this purple color matched up almost to the exact day, well, my calculations to the day, the last cycle before that, which was quite odd. And he points out, and I can get into the nitty-gritty of the conversation here, which might take this video to probably half an hour, 40 minutes long, but he pretty well says the reason why it didn't actually have a blow-off top and it didn't happen somewhere over here, again with this same sort of principle, is the fact that we had a lot of kind of unforeseeable events actually occur around late 2021 and early 2022, which caused the whole market to go down in value. What am I talking about here? Well, of course, I'm mentioning things like Luna, FTX, and all the bank collapses that happened in the US. that helped push the price down. But his theory says that realistically, we're a part of a bigger trend here. This should have followed the same principle where, again, we reduce the all-time highs and the cycle from, trough to top actually gets longer and longer and longer. And the sort of theory he takes into consideration here is the Elliott wave pattern, which is a technical analysis pattern. I studied this for a bit when I first got into crypto and haven't really since, but this is more or less what he was trying to explain was playing out, right? This is, of course, the all-time high back in 2018. This is the all-time high at $69,000 back in 2021. And we were again playing this massive Elliott wave pattern out, where in reality, this should have been the end of the impulse wave or the end of that wave down. And then we should have had the final fifth wave up, okay? Again, this would have actually supported the theory of the lengthening cycle. This would have put us, somewhere around here. And so this would have looked something like this in reality, okay? And again, that was all part of his idea and theory. But what actually ended up happening was those events brought the price down. He expected us to be trading somewhere around here. And mind you, this guy's had these tweets out since, this was back in 2022, but he had these back out in 2020. He was predicting this sort of thing. And again, so you can see here in a bit more clear detail that from the very bottom to the top, it was quite steep, and it gets less and less steep, more of an incline. And we were kind of cut short over here, okay? And so if you kind of plan that out as intended to, as he actually forecasted, it ended up being sometime early 2023. But if you actually forecasted to what is likely relevant today, it ends up being sometime mid to late 2024. That is kind of what actually ends up happening in this case, which is super, super concerning, because if we actually are a part of a larger cycle, right, if this is still playing out and, we are likely coming up on that fifth impulse wave, and in reality, this fifth impulse wave probably looks something like this, right? Then, of course, what's going to happen? The market's going to crap the bed sometime in, again, quarter 3 or quarter 4 of this year, all right, which is then going to put us into a further deep bear market, which, again, people might say, that's a load of bullcrap. It all follows the halving principles. Well, just like he said, all we can really do is follow the data. And what the data has been indicating for the cycles before the most recent one is that this has been going like this, diminishing returns, longer trough to top. So again, technically, we might have a very short cycle in this case, but in reality, the cycle is a much larger cycle happening from the last bull run still, okay, but still in the 2022 bull run, except this should have happened over here, not down here, which again was caused by those much larger events. And he says, and this is exactly quoted from some of his tweets, I think last year, okay, so this isn't even recent. In December of 2021, we were trading at $60,000 and the masses were screaming for a blow-off top. So that was way back over here. He explained why he expected us to find a local top soon and a correction to at least $30,000 or $40,000 before the actual blow-off top wave occurred 6 months later. So again, what he was predicting at this point in time, right? This is back in 2021. We just had the $69,000 Bitcoin price target hit right here. He was anticipating a wave down. You can see the wave 4, which again is an impulse wave, which pretty well means a wave that comes down. And then have that fifth wave that comes up from this point, after we kind of consolidate around the prices of $30,000 to $40,000 before the actual blow-off top happens. Because remember, every single cycle before this one, we have had a massive blow-off top. And in the last cycle, we didn't. Okay, we exactly mirrored this one, which again is actually irregular to what happens in the cycle. So I can kind of be here days on days on days and talking about all these different situations and diving into the facts more. Again, you can kind of see this playing out. In this case, what might happen is we might peak over here in quarter 3 of 2024, and then we come down into actual bear market. And then, 2025, 6, 7, 8, we of course have maybe a global financial crisis, which is what is expected. And then we don't really have a cycle until, wherever this kind of lands us, right? Sometime in about 2030, maybe even longer, maybe even 2031, which actually would play out. Like I could definitely see that playing out again based on a few external market factors, real economic, factors as well. So he says here, our cycle that started in 2018 has not yet completed and that we are still missing a final fifth wave. That fifth wave I was explaining to you about before to the upside, which has now officially began off our lows at 15K. This final move to new highs above 69,000 would mark the end of a 5-year cycle. So this next move we're about to find ourselves to $100,000, $150,000 could be the end of this massive long cycle, the longest cycle we have seen since Bitcoin's inception. and in line with the idea of lengthening cycles, okay? Again, lengthening cycles, diminishing returns. It's played out. This was actually something he literally plotted out way back in 2020. This was a screenshot from one of his tweets, and he pretty well called it, right? This fifth wave over here did not happen. This fourth impulse wave happened because, of course, those crashes brought us down, and we could find that wave up. Now, of course, this is definitely left field, and I know a lot of you are probably scratching your heads right now thinking to yourself, what does this really mean? Well, I'll get to what this means in a minute, but suffice it to say that you may have to sell your tokens sooner than expected, which just means you're going to have to be prepared now. Not in the next 12 months, right now. Now, the second theory is, of course, following the regular 4-year cycle, which pretty much just says every halving, we have 2 years of bullish momentum, followed by 2 years of bearish. We have the next halving, 2 years bullish, 2 years bearish, so on. And one of the pioneers of this chart right here, the stock to flow model, which has served a great purpose in crypto for pretty well inception, tracks the months of the next halving in this color here. So when we have red, that means that we've just had the halving. Orange, it gets further and further away until green, and blue indicates, dark blue, we're right before the halving, and then it resets, okay? So, and then it obviously goes to the maximum time before the next halving and, continues. And so this was previously thought in the last, 12 to 15 months, invalidated because we fell well and truly beneath where we expected were to be, okay? But notice we've had this massive U shift, and we've recently, just as of the last few days, plotted this nice blue dot up as expected with where we really have been in the past as to the price of Bitcoin per the stock to flow model, all right? This dark gray color here is the stock to flow model rough price of Bitcoin. And it is, yes, expected to go up to $500,000 if we just simply follow this pattern, right? We are expected to reach this level over here, all right? Now, we might obviously shoot for the stars or aim for the stars and end up somewhere down at 250K, which is still well and truly above my expectation for the price of Bitcoin. But it is interesting to know that this is where we actually land up. But it is interesting to know that this is actually where the chart says we end up. Now, I bring this up because basically a lot of people, including myself, again, said that this was invalidated, but now it is back on track like it ain't a thing, right? It's back to being normal, and I think everyone's kind of like, okay, well, maybe we should have been listening to this thing the whole time. Maybe it wasn't as nice, straight, even chart and this even sort of pattern and didn't stick to the gray stock to flow area, but it has come up to where it needs to be at the current time, okay? So that's very, very interesting, and I wanted to, kind of highlight this because in a recent video where Plan B brings up the stock to flow model, he says the top will be in 2025 again and not in 2024 if we just follow this curve, right? From the time we are right now, this curve, time we are right now, curve, time we are right now, curve, and yes, that would put us sometime in 2025, as you can see here, which would put us about mid to early 2025, basically on track with what we're expecting from the 4-year cycle, okay? He did say, though, he expects this cycle to go even higher than in the past to make up for the lunar debacle and China banning miners. Back when that will happen, that will also help suppress the price of Bitcoin overall. As we know, we have the ETF. So what he summarizes and says is, yes, we're back on track with targeting and tracking the bull run, but it's going to be even more explosive. He actually thinks, again, we're pretty well going to have another situation like what happened back in 2018. So do you notice a pattern here? On both of these situations, both of these guys on opposite ends of the fence, and I think most people fall between these two areas, all agree we're going to have one massive bullish momentum leg up. We're going to have it, whether it's that massive impulse wave, whether it's the traditional market going up from here, and we're going to still have pullbacks, yes, but we're going to go up and have a massive blow off top. I think we're all agreeing it's going to be huge, okay? But it's when it comes, right? Whether it comes over here or whether it comes over here is the question, because if it does come earlier rather than later, you might be holding your bags, okay? We also did see this red dot pop up on the Bitcoin market cycle here, which confirms we're in a bull market. Every time we've seen this red dot pop up in the bull run, we have not had a sort of a secondary color pop up after it, so it hasn't invalidated yet. So notice that this is the bull market signal. We haven't had like a blue dot or a yellow dot or a green dot after it. It's always been immediately red dot following red dot following red dot. So that, of course, is a good sign. I think, again, we all pretty well know the bull runs here. And this pretty well follows my thesis of, following the last few cycles and mapping out when we can expect the top of this one to happen, which was previously thought to be, quarter 3, quarter 4 of 2025. Now, if you're asking me, there is, of course, one answer to all of this. But before we get into it, if you're asking me kind of what do you think's likely to play out more, I actually think situation 1 is a much more interesting theory. I wouldn't say it's more likely to play out, but if this one actually happens, it would make a lot of sense to me. I don't think that following the 4-year cycle like we have been is going to last forever because it's completely dependent on Bitcoin. And as we've all known for the longest time, there's going to be a cycle where we begin to move away from the halving itself being an actual indicator of, explosive potential. We are going to end up kind of like the stock market where it's more steady growth over time, which again plays out into this theory, whether you want to like it or not. So all in all, my answer is very simple. This is the start of something big. We are here. We are likely to have that fifth impulse wave up, or we truly are going to have the 2025 bull run, which honestly wouldn't surprise me if it ends up looking like this. However, if the market goes up, down, left, right, or sideways, no one knows from this current time. All we can do is take both sides in and expect what is going to happen immediately. And how do we really profit? How do we benefit? Well, it's crucial you know these things ASAP. I think, first of all, do not expect a massive crash on or after the Bitcoin halving because I think, again, it's already priced in. I think miners aren't going to be selling, which is usually the reason the price of Bitcoin falls after the Bitcoin halving because of a few reasons, right? This is actually a chart here again from Plan B. And he uses this black line here, which is the 200-week moving average, which is very similar to what I use in my charts over here, which is the 1,450 day moving average. It's the same thing. It's the 4-year moving average for each cycle. And we can see that he also points out in this that we haven't fallen beneath this trend line once we have made our way above it around the time of the halving. Notice we've kind of eclipsed it in this point over here. We have the halving and we continue up. We don't touch this line again until the next bear market. Same story here. We have this sort of halving event. We've touched it. We come up. We don't touch it again. We, of course, were pushed down by Luna, FTX, the bank collapses, Celsius, all that sort of stuff happened in this rough time as well. And then now we've kind of come above it right in time and on cue with the previous cycles. And right now we're tracking at $32,000 on the moving average. That's the price right now. And I think by the time of the halving, it'll be about $33,000 to $35,000, so long as we keep the current trajectory happening. Now, he said, and I agree, it's very unlikely we break this moving average because we haven't done it historically. Very simple, okay? And to add insult to injury, miners are actually mining Bitcoin for $23,000 a coin. So even if there was some news that these big managers decided to pop out and it really did tank the price of Bitcoin, miners aren't going to capitulate because they're mining Bitcoin so cheaply right now that it doesn't make sense for them to sell. They're still going to be in a profit, almost 50% profit, which is kind of insane to think about, okay? So I don't think that maybe we might have some sell-off because, of course, if there is massive amounts of FUD, that would definitely cause it. But I think this is a very, very strong point of support, and we really haven't come that close in the grand scheme of things in the previous cycles around that time, or at least the time of the halving, okay? So I don't think anything more than a 30% crash over this next period of time would really happen. If it does, I would teeter on that being an unforeseeable event. Number 2, nice and simple, more in than out. How many times have I said over the last few months, it is better as a risk to reward ratio for you to be more in crypto than out of crypto. And I'm not talking be 100% in crypto. I'm talking about being a nice split of about 70% in, 30% in stable coins. The end story here is to be a little bit out of crypto, 20, 30%. I'm actually about 15% myself, and no more than I think 90% in and no less than about 60% out. Of course, that's not financial advice. That's just going off, if we have a crash, you have cash to buy. If we go up, you're more in than out. Number 3, sell levels are integral. If you don't have sell levels for each of your altcoins, you are running a massive risk. That next big impulse wave or that next, first leg up in the actual bull run here, it's going to be powerful. And I think everyone agrees with that, whether, you're on the left or the right side of the fence. So to be the most prepared, set those sell levels up. If you're staking or you don't have your tokens on an exchange, which probably is a smart idea, I guess, then you want to at least have them written in a book or written, marked up on TradingView and somewhere where you can easily see it and punch it into an exchange so it saves all the hassle. Now, if you're thinking, sell levels are difficult for me to punch in, takes too much time, too much math, we actually have an exit plan calculator coming out for level 2 on the private community here in the next few weeks. So if you did want to have that stress-free, all taken care of, that is where you'll be able to find it very soon. And number 4 is keeping an eye on narrative pumps as a blaring siren to get out if you haven't hit your sell levels. Important. I cover narratives on this channel as when an altcoin hits their all-time high. If you find that your altcoin, for example, right, is in a narrative, let's just say This is a big Oracle narrative, and all Oracles are pumping. You know, we have Chainlink, we have Pyth like this, we have Teller up as well. All these different Oracles are pumping up, and you're in Chainlink, right? This is Chainlink here. And let's just say, for example, we mark this period here off, and you realize, okay, well, Chainlink so far, you know, my sell levels are all the way up here. It's nowhere near my sell levels. So starts depreciating. It looks like the interest in Oracles is losing its steam. What I would do, again, not financial advice, this is why it's important to be in the private community, because I will call this out when it happens. I would, personally speaking, look to just cut my losses and sell out. Now, this is going to depend on a couple instances. It's going to, again, depend on the current liquidity and the current volume that is happening within the Oracle narrative. It's going to also depend on the growth and interest in the Oracle narrative, but importantly, the sentiment of the entire market. Is it bullish? Is it looking bearish? Where are we currently at? So there's a few variables that go into it. You don't want to just sell and panic, but that is when projects have their all-time high, and if you haven't hit your sell levels at that point in time, chances are, by accident, you may have set them too high. So guys, with that being said, you want to have all that ready, track your narratives, follow your narratives, because if we have this last leg up, again, it might be that impulse, it might be that first scenario, you might end up not really having a true narrative run. So keep this switched on. While we can celebrate now, we really shouldn't be. We really should be focusing on the next hurdle, which is this, in my opinion. Thanks so much. Talk to you soon. Take care. Bye.